Imagine checking your bank statement on a quiet Monday morning. Everything looks normal at first glance, but then you notice a charge for $12.50. It is not a purchase you made at the grocery store. It is not a mistake by a human teller. It is a fee you do not recognize with a name that makes no sense. You might think it is just a one-time error, but for millions of Americans, this is not an accident. It is a feature of a highly sophisticated system. The banking world has changed quietly over the last few decades. It has moved away from being a safe vault for your savings. Today, it functions more like a high-frequency trading machine. This machine is designed to find every loose cent in your account. It uses algorithms to predict your behavior before you even act. Behind the glass doors and friendly smiles is an invisible drain. This drain siphons billions of dollars away from hardworking people every year. Most of this money comes from those who can least afford to lose it. Seniors living on fixed incomes are often the primary targets. In this discussion, we will pull back the curtain on these hidden tactics. We will look at the math they hope you never calculate. And we will explore how you can stop the leak in your own finances. Let us start with a concept the industry calls the float. When you deposit a check, you expect the money to be there instantly. In our world of high-speed internet, that should be easy. Yet, your bank often tells you the funds are pending for 3 days. Have you ever wondered where that money goes during those 72 hours? It does not just sit in a dark room waiting for a green light. Your money is actually very busy earning profit for the bank. During this transit period, the bank lends your money to other institutions. They do this on the overnight lending market to earn interest. It is called net interest margin, and it is a massive revenue stream. They use your cash to make a profit while telling you it is unavailable. If you have $10,000 in transit, you earn 0%. But the bank earns a guaranteed return every single night. Multiply that by millions of customers, and the scale is staggering. This delay is not a technical limitation of the modern world. It is a choice made to maximize corporate earnings at your expense. They are essentially taking an interest-free loan from you. And they do this every time you move your own money. But the float is only the beginning of the story. The real danger lies in how they process your daily transactions. Most people assume banks process charges in the order they happen. If you buy coffee at 8 in the morning, you expect it to be first. If you pay your power bill at noon, you expect it to be second. But many large banks use a tactic called high to low sequencing. At the end of the day, their computer looks at all your pending charges. Instead of processing them by time, it processes them by dollar amount. It takes your largest payment, like your rent or mortgage, and subtracts it first. This is designed to drop your account balance to zero as quickly as possible. Once the balance hits zero, every small purchase after that triggers a fee. That $5 coffee can suddenly cost you an extra $35. If you had 5 small transactions before the big one, you would pay no fees. But by reversing the order, the bank can charge you 5 separate fees. The Consumer Financial Protection Bureau has flagged this for years. They call it an unfair and deceptive practice. Yet many institutions still find ways to hide this in the fine print. They have turned a simple accounting task into a psychological trap. The system knows exactly when your Social Security check arrives. It also knows exactly when you are most likely to run low on funds. Some algorithms are now so advanced they can predict a low balance. They may even delay a deposit while rushing a withdrawal to trigger a fee. It feels like the house always wins, much like a casino. But unlike a casino, you did not agree to gamble with your livelihood. There is another silent predator in your bank statement. These are the ghost subscriptions and microtransactions. We live in an era of automatic payments for everything. Streaming services, gym memberships, and news subscriptions. Banks love these because they are predictable and easy to automate. But they also know that humans are forgetful. If an automated payment hits an empty account, the bank celebrates. They do not just decline the transaction and move on. They pay it for you, then charge you an insufficient funds fee. This fee is often 10 times the cost of the original subscription. It is a penalty for a mistake that the bank could easily prevent. They could offer a simple alert or a block on the transaction. Instead, they choose the path that generates the most revenue. This is especially predatory for those on a tight budget. A single forgotten $10 bill can spiral into $100 in debt. And once you are in that hole, it is very hard to climb out. Interest rates on these hidden debts are often higher than credit cards. While this is happening, the interest they pay you is almost invisible. Inflation is currently eroding the value of the dollar every day. If your savings account pays 0.1%, you are losing money. The bank takes your savings and lends it out for mortgages at 7%. They keep the massive gap between those two numbers for themselves. They are using your lifetime of hard work to fund their expansion. It is a wealth transfer that happens one penny at a time. But you do not have to be a passive participant in this game. Knowledge is the first step toward financial self-defense. The first thing you should do today is check your overdraft settings. Most banks automatically enroll you in overdraft protection. This sounds like a helpful service that prevents your card from being declined. In reality, it is a license for the bank to charge you fees. You have the legal right to opt out of this service entirely. If you opt out, your card will simply be declined if you lack the funds. A declined card might be embarrassing for a moment, but it is far better than paying a $35 penalty for a loaf of bread. Call your bank and tell them you want to opt out of all overdraft services. The second step is to move your money to a credit union. Credit unions are member-owned and non-profit organizations. They do not have shareholders who demand higher profits every quarter. Their fees are usually much lower, and their interest rates are higher. They often treat their members like people rather than data points. Third, you must set up real-time balance alerts on your phone. Technology can be used against you, but it can also work for you. Set an alert to notify you every time a transaction over $1 occurs. This will help you spot unauthorized charges or ghost subscriptions immediately. If you see a fee you do not recognize, do not stay silent. Call the bank and ask them to explain exactly what the charge is for. Be polite but firm in your request for a refund. Many times, a simple phone call can get a fee waived. They count on the fact that most people are too busy or too tired to call. Do not give them that satisfaction. Your money represents your time, your energy, and your legacy. It belongs to you, not to a corporate algorithm in a skyscraper. The banking system is powerful, but it is not invincible. When we share this information, we take away their greatest weapon. That weapon is our own silence and lack of awareness. Have you ever looked at your statement and felt something was wrong? Did you find a fee that seemed to appear out of thin air? I want to hear about your experiences in the comments below. By sharing our stories, we can identify which banks are the worst offenders. We can help our neighbors avoid the same traps we fell into. Let us build a community that looks out for one another. In our next discussion, I will show you which institutions are the safest. I will name the banks that still value honesty and transparency. Until then, stay vigilant and keep a close eye on your accounts. Protect what you have earned, and do not let the invisible drain win. This information is for educational purposes and is not financial advice. Always consult with a qualified professional before making major changes. Thank you for your time and for choosing to stay informed. Your financial future is worth the effort it takes to protect it.